Looking at the market, down 1% in yesterday's trading session. Is it losing steam?
I don't think it's losing steam. What's happening is just profit taking and the end of the earning seasons as we know it, because most of the companies that would have elicited excitement from investors have already announced their results. So that's usually a trend that whenever you get to the quarterly earning seasons, you see a small rise in the stock market. However, we've seen that interest rates are falling, inflation is falling, and the shilling is gaining strength. So that could boost the market in the medium term. The only now overriding concern is now the political outlook and the elections that are to be held in March 2013.
Looking at some of those earnings, we had CFC Stanbic out with results yesterday. Like I said, pre-tax profits at 36.5%. How did the market react to these numbers?
I think the market didn't react. As you saw, the stock price was largely unmoved. And I think one of the things is that investors are looking at the capital ratios for CFC Stanbic, and they're still running a bit thin. And I think now what investors are waiting for is that an announcement with regard to their rights issue for now more clarity about the future prospects of the company.
Future prospects of the company. Let's look at Athi River Mining, also down in yesterday's trading session, down 8.42%, sitting at 185 shillings. We did have some positive numbers coming out of Athi River Mining. What drove this fall in yesterday's trading session?
I think Athi River Mining is one of the more pricier stocks with regards to PE, with a double-digit PE of around 19 times earnings. So I think it is expected once in a while that there will be a dip in the stock based on the fact that the market right now is around 8 times earnings. So that's the main factor that drove the decline. However, with regards to potential and earnings, I think ARM is still a strong counter. They grew their earnings by 24% over the last quarter, and I think going forward there's a lot of demand for cement within the region, and the expansion strategy looks very exciting. So we should see some solidity in the price for ARM.
Kenya Reinsurance out with the results last week, looking to enter new markets there in Kenya, down in yesterday's trading session by about 5%. Would you say that's profit taking after those positive results we saw coming through?
Yeah, it's part profit taken and part the realization that some of the investment income was driven by a one-off sale of a property they have here in Nairobi. So I think going forward, the company still looks good. It's one of the cheapest stocks with regards to earnings, but there's still the issue of the retrocession and when insurers will be allowed to cede reinsurance to other companies apart from Kenya Re, because right now I think they have a fixed mandate. So I think that's what's weighing on the stock by and large.
And moving on to the banking sector, we have Standard Chartered has picked advisors for the rights issue. They're looking to get new capital of about 3.2 billion shillings. Let's talk on the rights issue environment there in Kenya. It looks like investors are pretty positive that the market will be able to assist them in this capital raising.
Yeah, I mean, last year was actually when the companies needed capital the most, because a lot of assets were underpriced and it would have been a good time to come in and raise capital. However, the market was not conducive. But now we've seen DTB coming up with a rights issue, NIC has come up with a rights issue, CFC Stanbic, and a few other banks locally, such as Family Bank and Commercial Bank of Africa, who have raised capital in the industry at the moment. So I think it's the right time for Standard Chartered and other companies to raise, because we've seen an improvement in the macroeconomic environment and the stabilization of the currency. So investor sentiment is rather strong as compared to last year. So I think it's the perfect time to come and raise capital.
We've had a number of companies reporting results of late. Now, when you look at the different sectors, where are you putting your money in at this stage?
I think at the moment, one of the best things to do would be to start looking at insurance, but more on a speculative perspective, because last year what drove insurers' earnings lower was a weak market, but the market has by and large improved. So it would be good to look at some insurance. Look at Jubilee because of the diversity in their investment earning streams. They have interest in energy, industrial companies, manufacturing companies, financial companies. So Jubilee is one of the strong counters in that perspective. In the banking side, you could probably look at NSE and DTB, because there should be some good growth from their regional expansion strategies, and probably some of the cement manufacturers, cement makers, because of the infrastructure growth within the region.
It's all about earnings in Kenya. BOC Gas Kenya is expected out with results this morning. Your expectations on what's likely to come out there?
I think BOC is likely not to present impressive results because of the financing environment during the last half year, the last 6 months. It's been pretty high with the interest rates and inflation. So I think for the half-year results to June, we don't expect to see much improvement, and actually there could be a dip in profits.
You touched a bit on the macroeconomic environment over there in Kenya, but when you look at the situation now, we are sitting with a situation where we could have a fresh round of inflation given the high food prices that are due to come through. What's the likely impact on Kenya, given the fact that we have seen inflation coming down quite significantly?
You're right, and it seems that we keep on going from one crisis to another. Right now we've seen oil touching $114 per barrel, and it's going back to its March levels of $120 per barrel. And we've seen the drought in the US that has increased corn prices significantly. So global food prices are also expected to rise on the back of higher fuel prices and the drought in the USA. So it could lead to another round of inflation, not only in Kenya but within the region. And that could affect investor sentiment. But from Kenya, where we've seen is that we're already at a very high base with regards to CPI. So any inflation figures going forward will max out at 10%, and it won't be as bad as last year.